Okay. Is the sound here now? Can you hear me now? Can you guys hear me? Let me know if you can hear me. The sound should be back, should be on now. Oh my goodness. So let's share the video so we can start. Let's share the video. Today I won't spend I don't want to take up to an hour. Whatever I'm going to talk about. So there could be a tendency that today's session might have a part two. The tendency is there. That today's session might have a part two. Oh my goodness. So let's share the video. If you haven't shared the video, do so now quickly so we can get started. If you haven't shared the video, do so. I'm waiting for us. I'm waiting for us to share the video so we can start. Okay. How many of us have shared the video? How many of us have shared the video? I'm waiting for us to answer. You are the ones I'm waiting for. So when we've shared it, you let me know, then we can get started. Okay, so today is our fourth episode of five on our post-halving series, and we are talking about trading strategies. Trading strategies. Those of you who were present during the bear markets live streams we're holding, the bear market live stream sessions we're holding, you get to see me talk a lot about week off strategy and some methodologies during that season. Now, and there's something I always emphasize on, that the strategy you use in a bear market is different from the strategy you're going to use in a bullish market. These are two different strategies. You cannot be doing what you're doing in a bearish market and do it in a bullish market and expect results. Or the same way you cannot be doing what you're doing in a bullish market and apply it to a bearish market and expect results. It's not going to work out. It has to be different. You have to do two different things. Now, that same approach works in the place of trading. So, first of all, in a bear market, week off is king. In a bear market, week off trading strategy is king. But in a bullish market, your focus is that you just want to get your entries right. The sweetest time to trade and make a lot of money in the crypto markets is in the bullish markets. That is the easiest time. The easiest time to trade cryptos and make money is when the market is bullish. When the market is bullish. So basically, we are in that bullish state of the market. Therefore, we are in an opportunity season. So, like I emphasized that during the bear market, week off is king, is the most powerful strategy, is the most important strategy. Right now, what matters most is not even its entries. You just want to get your entries right. Entries, how you can enter the market. So basically, what I'm going to do for us today is that I'm going to show you two different entries that are very powerful that you can use. I use them myself, and if you use them very well, at least you could be doing like 100% of your capital or 50% of your capital every single week, depending on your expertise, the level of expertise you have in trading. So some people, even if it's 30% of their capital per week, is fine. Some 50% of their capital per week is fine. Some 100% of their capital per week is fine. Some 200% of their capital per week is fine. So it differs for each person. So one person's results will be different from the other person's results. Some people are going to make more, some will make less. But what matters is understanding it. So there are two entries strategies. The first, I'm going to just teach only one, but I can tell us one, so those who want to go and do their own research can do and learn themselves. One of those entries is called QML. So we have what we call the QML entry strategy. So the QML is basically Quasimodo's pattern, a Quasimodo pattern. So QML is basically Quasimodo, QML. So for those who want to personally go and do their research and know that, you could do that. You could learn some Quasimodo patterns and see how you can apply them. But I'm not going to teach or talk about Quasimodo here or how I apply it, because you could have one strategy that this one is there, but the way each trader applies it is different to get results. But for today, what I'm going to teach is what we call HSE. So what I'm going to teach today is called HSE. It's called Harmonic Smart Entry. So those who are my trading students who basically learned how to trade from me would have heard me talk about this, seen me analyze this, or also have even seen me be shared this one way or the other once a couple of times. So basically what I'm going to talk about the show is HSC. Why am I showing HSC? Because it is very powerful in the season we are in, the time we are in. And the reason I'm speaking the way I'm a bit slow today because I'm actually exhausted and tired. But because I said I want to do this session, that's why I'm here doing it. So bear with me. I'm exhausted and tired, and funny enough, after this session, I still have another meeting I need to go out for and attend before coming back for the night, so for the day. So I'm exhausted. Basically, when I'm gonna have a few hours of rest, it's gonna be by probably late in the night or tomorrow. So bear with me, but make sure you're paying attention to what I'm saying because I will soon go to the charts now. HS is what I'm going to show us today. Um, Harmonic smart entry because it's very powerful if you utilize it if you make use of it during the bullish markets. You can literally make a lot of money when you use it in the bullish market. So I'm going to go to the chart and I'm going to show us how I've applied HSE and how you can use it for yourself. And we'll do some practical. So before I talk about HS, what is HSE? HSE is basically blending smart money concept with harmonic patterns. Simply the blending of smart money concepts and into harmonic patterns. What is harmonic? So let me simply go here. Let me go to Google and type what is harmonics. Oh, I made a mistake in the spelling. I'm going to share the screen briefly. Okay. So what is harmonics in trading? Harmonics is simply a trading approach that uses geometric patterns and Fibonacci ratios to identify potential turning points in the markets. Harmonic patterns are formed by plotting Fibonacci retracements and extensions on a chart to predict the future price action. The primary purpose of trading with harmonic pattern is to anticipate potential trend reversals or trend continuation points in the markets. Traders use these patterns as part of their technical analysis to make informed decisions about entering or exiting positions. So what is the simple meaning or the simple illustration of what I am saying, of what I just read for us now? Okay. The simple illustration of what I said for us is that with harmonic patterns is a combination of geometry, Fibonacci retracement. So if you know Fibonacci, basically making use of these tools to be able to analyze where the markets could reverse from, where it could continue from. So if the market is on a bullish trend and it's going, you'll be able, it can help you to spot out major points, and it gives you very good entry levels. So I will show you how. Now there are about 7 to 8 harmonic patterns, but you don't need to know all of them because it will be what I call a backlog of knowledge, too much knowledge. I will just show us one of the patterns which is the most powerful if you understand it. There are actually 3 out of the 8 of them that are very important in a bull run season. The rest are powerful during a bearish market, but not during a bullish market. In a bullish market, like when we are in the bull run, there are only 3 that are very powerful, and I will show us one of them today. How I apply them, how you can apply them, and we can make a lot of money using them when you trade. Obviously, when this session is over, the video is going to be left on the YouTube, so you can literally like rewatch it by yourself as well. And if you have questions while I'm talking, just feel free to drop the questions. I will attend to the questions. But I'm timing myself. This is just 10 minutes. We're just 10 minutes in so far. So let me share the screen now for us. So this is Bitcoin. Remember what I said about Bitcoin, guys? Remember the last time? What did I even say about Bitcoin? I said that from the 27th or 28th to like the 4th, to the 4th of May, Bitcoin should come into this hour. Okay, yes, the tag is here. So it was 24. Say from the 20, from when that day to this is the vertical line. Okay, to the 4th of May. So between then and 4th of May, Bitcoin should come into our buy level. So it's already going down. It's at 59,300. Interesting. So it's almost entry. It hasn't gotten to our level, but it will soon get into our bottom level. So we have like 59k here, right? Okay, let me delete this so it doesn't confuse us. So we have the first one here is okay, so we have 59k, right? We say it should come below. Okay, I said it should come below 59k. Yes. So once it comes below 59k, so let me remove this, which is already around that level. We are now targeting 58, 50. So we have like 58 here, 57,000 region, 55,000 and 53,000. So that's where these lines are, regions as well for a bounce in the markets. So it's literally going down. So the bounce, it won't last for a very long time. So we still have like from today is 30th now. We're yet to even enter into the month of May. Tomorrow is first, right? Tomorrow is first. So tomorrow is going to be 1st of May. Oh, so that means there's a possibility that as we enter May, it could just get into here and then bounce from here. That means May is going to be the beginning of a bullish movement. That's what it means. It basically means May is going to be the beginning of bullishness in the market, which is a very good one. Very, very good one. Okay, let us go to harmonics. So I want to show us how do we use harmonics. So the what pattern am I teaching us today? I'm teaching us the what is it called? The Bullish Gartley pattern. It's called the Bullish Gartley pattern. I'm having faint thought because of. So I'm teaching us the Bullish Gartley pattern. The Bullish Gartley pattern. The Bullish Gartley pattern. So this is one of the 3 patterns that are super powerful during a bullish market. So we're using the HSE model to get entries. Now the question is, how do you now use a Bullish Gartley pattern within the HSE model? How do you do that? How do you do that? How do you do that? Now, I want to make an announcement. I want to make this announcement, and I'm very serious about this announcement. Those of you who, despite the fact that when you reach out to me, there's already an already made discount for you for the Bull Run group, and you're still asking me for an extra discount. Don't near my DM. Don't try it again, because Some of you don't know the value of what you have. You don't know the value of what you have. If you know how many millions I spend to get information, to get data, to get information and data, one, you will value it. And if I'm even giving a discount, you should even see it as an opportunity you should take. And if you are unable to see it as an opportunity, then you can just get out. Do you know how many millions I spent to get information and to get data? And I create time to make it, to just let it be that I can help as many persons as possible. So let us mind ourselves. Mind ourselves. If you cannot afford the discount opportunity, then you're not serious for yourself. You're just not serious for yourself. The bull run will not last forever. It won't last forever. And one thing I know, in the next coming days or so, the price of everything I'm offering will soon increase. The same, it's going to increase. The price of the ETF report will increase. The price of the bull run group will increase. So if you're serious about changing your life, you plug in. If you're not serious, there are so many persons out there, you can go and pay them. I don't care. You can go and pay so many persons out there. But if you're serious and you really want my knowledge, you really want my mentorship, then you should know that if I'm giving a discount, it is already as good as free. Do you know what it means for somebody to be in an online industry for 14 years? I've been in an online industry for 14 years. 14 years is not 14 days. When it comes to the internet, I am a grandpa, a grandmaster. That's why the name Shifu is there. Shifu is not because of just an accolade. It's something I have earned. I have put in more than 10,000 hours. And then even when it comes to trading, I've been trading for over 8 to 9 years. I've been in the crypto industry. I've seen the good, the bad, the ugly. There's nothing anybody wants to bring right now that I haven't experienced. And that is why my accuracy is top notch. And that is why out of every 10 information, 8 to 9 do well. Because you can't buy experience. You can't buy the quality relationships. The point I'm in right now when it comes to crypto, the Web3, there are very few persons in that level. Why? Because there are very few persons who are willing to pay the sacrifice to be in that level. So respect yourselves. If you take advantage of the opportunity, make use of it. Make use of it. I come time and time to give information on free. I share information time to time. I teach. If you understand how valuable it is, you will make out time to make the most from the free information that is given, because even the free information are super valuable. I want people pay premium to learn. It's what I teach for free. So let's be guided to those who this warning concerns. If you let me just stop there. Let me continue. Let me go back to what I'm teaching. So we're talking about the bullish Gartley pattern. The bullish Gartley pattern. How we can use it within the confines of HSC, harmonic smart entries. Harmonic smart entries. Now, I'm going to use PEEP as an example. So let's go to PEEP USDT. So this is PEEP USDT. And I'm going to make something silent here. I'm going to hide some of these stuffs, and then probably make some of them remove the price label. I just want to, so it can be it won't be cloggy for most of you guys. Okay, can we see my screen? Can we see the screen now? So let me remove this. Okay, now I'm look here. I'm going to highlight this is where I'm going to highlight. So this is a 2-hour chart. Now you can do this on the 2-hour chart, on the 4-hour chart, on the 1-hour chart. Where do I draw these patterns? On the 4 hours, on the 2 hours, on the 1 hour. 4 hour, 2 hour, 1 hour is where I draw this pattern. 4 hours, 1 hour, 2 hours is where I draw this pattern. Now, this pattern is, like we said, it's all about Fibonacci retracement too. So we'll just use the Fibonacci, and I don't want to go into geometry so we're not confused. So let me use Fibonacci and make it very simple for us. This pattern consists of five parts: the X, the A, the B, the C, and the D. The X, the A, the B, the C, and the D. Now, I'm going to draw it, then I'm going to now show us how I got it, so we're not confused. So this is an X, this is an A, this is a B, this is a C, and this is a D. Because if you're on the bull run group, you'll notice there was a pip trade I posted where I made 3,000% on that pip trade. Now, this was how I entered that pip trade. This thing I shared there now, this was exactly how I got the pip trade. And this was what I did. But I'm going to show us how do you get the question now is, how do you get the X, the A, the B, the C, the D? How does it come about? Now, D is the entry. D is where you enter the market. But the question is, how do you get a D? And now this is the shape of how a bullish Gartley looks like. This is how a bullish Gartley looks like. So what I will do now is let us go back to Google. Let's go back to Google. So if you type here bullish Gartley, it should show you different things. But since I'm not using a slide, I want to try to make this as easy as possible for us. The pattern consists of 5 points, X, A, B, C, D. The XA leg is the blah, 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 blah. All this thing is not what is needed. I need the pictures. So let us go to the images section. And then, okay. Which image section am I going to use for us now? Okay, let me use this image. This image is better. I want us to be able to see this image. So now, in this image, what you're seeing here is measurements of the Fibonacci 2. You use the Fibonacci 2 to measure certain points. The first point is X and A will give you a B. Then the A and B will give you a C. And then the B and C will give you a D, or we can say the X and C will give you a D. So I repeat, X and A will give you a B. The A and B will give you a C. And then the X and C will give you a D, which is your final entry. Now, there are measurements here. And these measurements, we are going to use the Fibonacci tool to get these measurements. Now, according to what it's saying here, it means that to find your B, X and A needs to be at 0.618. And to get your C, the C is going to fall within the retracement level of 3.82 and the 886. And then to get your D is that your D needs to be at 0.786. The calculation might still be confusing for a lot of persons, but I will have to let me remove this. And then let us do it practical. Now, this is the Fibonacci tool. So anywhere could be your X. You can start from any point, but it should be like this in this order. From here, you go here. So you pick from a low to a high. You pick from a low point to a high point. Let me see if I can edit out some part of this. Some part of okay. Now you pick from a low point to a high point. So this is our low. This means our low is our X, and the high here is the A. Now, what you're targeting for is to get the B. We say X and A will give you the B. Now, the B is the retracement level. So you look at the Fibonacci too. The B has to retrace to 0.618. Now, most times it will not be picture perfect, but you should understand that for this to be valid, B has to retrace to 0.618 and move upwards. So for a bullish Gartley to be valid, it has to retrace into 0.618, which is this, and then move upwards. So when you mark it from here to here, you see it retracing down to 618. And then the next thing you want to identify is to identify your C. Now, the C is in between the A and the B. Now, this same Fibonacci 2, you will now bring it downwards here to the B. The B becomes your new low. And then the A still becomes your high. And when you bring it in between this level, what are you looking for? What are you trying to find? Let me still remove. There's still some things I need to remove. I'm trying to clear these things. What are you trying to find? Now, what you're trying to find is where does this high retrace into? Remember, we said that the retracement needs to be between 0.382, right? Okay, my chart is not showing. Interesting. I'm just seeing it now. Sorry, I have to start all over again. Wahala. 3, 2, 8. Okay. So, my God. I have to start all over again. Can you see my chart now? Can you see my chart now? Let me know if you can see the chart. Can you see the chart now? I'll start all over again. Today's session is very wonderful. Woo! Okay. Now, I picked the Fibonacci 2, right? So if you're with your PCs or with your tablet or a different phone, you could also be doing it alongside me. So I've picked the Fibonacci 2. I come here to identify my low, and then this is the high. So what am I identifying? I'm identifying the X and the A. I'm identifying the X and the A. Now, the X and the A is you pick a high, a low, and a high. So this is a low, right? And a high. And then you now look at where did this market retrace. So this is a, let's say it's a higher low and this is a higher high. The market retrace. So why are you looking at it to retrace for? You're looking at it to retrace into the 618. And like I said, it must not be picture perfect, but you know that, okay, look at the market came to 618 levels and it's bouncing from there. So this will now become your C. So the question is, what if this retracement now from this high comes below 618 to like 7.9? It is no longer a Gartley pattern. A Gartley pattern will still be around 618, either slightly on it or slightly below it, but it will bounce from 618. So when the market bounces from the 0.618 levels, most times is about to form a Gartley pattern. And then when it bounces, you now see the next thing that happens is that it goes here to do like what they call, some people call it retest or whatever it's called, retest or market continuation or whatever it's being called. Now, where it gets to is you not trying to identify a C leg, because remember you set this thing here, X and A. So the X and A is just the low and the high you identified, and where it retraces to, which is the 618, is your B. Now, where is going to be your C? What do you need to do? You need to click here and then click here. When markets retrace from here into this level, this is your C. As long as this market is above the 382 and below the 886 within these levels, you know, like you're sure that this could go as your C leg. This could go as your C leg. So let me see if I can draw. Oh, is there like a brush or something? Okay. Okay, I will use the brush. Let me just finish with this first and I'll use the brush. So when I saw this play out, what did I now do? What did I now do? I've identified the A and the B, which is just, you can just do it on any levels on the chart. So where you're trading, whatever market you're trading, whatever coin you're trading, you can just identify an X and A by yourself, because that's where you're starting the Fibonacci 2 from. And look at where does it retrace to and bounce from. It retraces to the 618. That is going to give you your B. And then when did it retrace to? It retraces in between the 382 and the 882. That will give you your C, while you're waiting for an entry. All these things are just identifying swing points and not even your entry. Your entry is the D. So how do you now get your entry? You simply still take this Fibonacci 2 back to where you started from, the A, the X, right, to the C. Now, based on the X and the C, this becomes your entry here, 0.79. So the key things you need here, the key Fibonacci levels you're looking at is 0.618, 0.382, 0.886, and 0.79. Just these four levels. 0.618, 0.382, 0.886, and 0.79. These four levels are the important levels you're watching out for when you want to trade a bullish Gartley pattern. These are what you are looking out for. These are the important levels to you for get an entry. Now let me use the drawing. So this is a drawing to write the brush. So the brush, so this is identified it's at the swing low, and then identified this as a swing high, right? and then the market retraced from there into here, and this level is the 618. This becomes my X, this becomes my A, and then this becomes my B. And then the market decides when it reverse into this point, is still between the 382 and the 886 of this level. This becomes my C. What am I looking for? A D entry. So when this market was retracing into this zone, I know this was going to be an entry for me. Meanwhile, this level here is going to be my stop loss. That was how I now entered PEP long trade and come in and then longed PEP to this level. Now let me use another example. Okay. Okay. Let me clean everything and use this example. So let's say this is a swing low, right? I'm using a Fibonacci tool now. So this is a swing low, and then this is a swing high. First of all, I say that you identify a single and swing low. The first thing that makes a Gartley pattern valid is that you want to see it retrace to the 618. But right now, there's no retracement to the 618, which means that this is a wrong calculation. A Gartley pattern cannot be formed. So if I adjust this to this level, what happens when I adjust it to this level? You see that the market bounced on the 618 from here. So from here to here, the market bounced at the 618 and then reversed back. So this is my X, and A has given me a B. And then I'll come here to the A and B, trying to find how high this market retraced to. And I see that it retraced above 382 and it didn't also go above 886. So it's in between the 886 and the 382, meaning that this is my C. Then the next question I want to ask is, okay, where will be my D, which is going to be an entry for me? Very simple. Since I've identified my X, A, B, and C, D is my entry. I will just come back to where I started it all over from my X, put the Fibonacci 2 here, take it to this level here, the C, and then my entry is going to be at the 79. Let me use here, and my stop loss is going to be this, right? While I target whatever levels or so. So if I want to enter peep trade, I would want to wait for market to get to this point, 609, and then I can now enter a trade, a scalp, and put my stop loss here. So with this trade, even though you target here, let's say you just target here, this will give you like a 1 to 3. If you target it to create a higher high, it will give you like a 1 to 5. If it continues going higher like 2, you could also make much money from it. Let me go to Google, where let me go to Google. There was a chart I saw. Okay, this one. So this person, I think this person was no, not this, this one here. So I think this is like a stock. So you see here how this person drew here is the same thing. This is an X. Why is this thing showing adverts now? This is an X, right? An a B, a C, and then a D. Exactly what I just showed. Now, this is an example of a Gartley pattern in this chart of this particular trade or whatever it is. In order to qualify as a Gartley pattern, the following rules should be qualified. I'm reading it out. Point B retracement of the original X and A should lie between 0.618 and 786 level. In the above example, 0.618 level comes at 209.68 and point B comes at 209. So it qualifies for the rule. Now, the point C should lie between 0.618 and one of the retracement of the A and B leg, but should not cross point A. So this C should not cross this point A. Now, you also notice that this person's illustration is different from mine. It's slightly, but the shape is the same with slightly. Basically, mine is more powerful because I don't know who this person is and where he got his from. But mine is more powerful, and that's why I say that the C should be between 0.382 and 0.886. So as long as the C is between those levels, it's a good trade, a very good trade. Which you can see, which he identified here. This person identified it there. And then the D is not a point, but rather it is a zone from where the price is likely to reverse, popularly known as potential reversal zone, which is arrived after satisfying the below two parameters: 0.786 retracement of the primary X and A leg. AB projection is either 1.217 or 1.618. So this is going to confuse some persons, but those who get it will clap for them. Now, this is what I just did on this chart with the two. So I come here, X and A, the same thing I just showed us already. This is my C, this is my D. So a little bit drop, I might want to long pep. Even if the market does not, let's say, what do I say now? If BTC drops and this drops a bit, I might want to long here. If BTC begins to peak, I might want to long this and send it, trade it higher. Let me use another asset class. Let me bring back all the charts that was once here. So let's go to Bonk, right? Let's go to Bonk. I'll use Bonk and show it, and then now this is Bonk. Okay. So on Bonk, you bring the Fibonacci tool. This is the swing low, right? And then this is the swing high. And you see where the market bounced from, exactly the 0.618. So we have identified our X, our A, and the 618 is our B. Then you still take this Fibonacci tool, come here, bring it here too, to see how high it's retraced. When it bounced from the 618, it still bounced in between above the 382 and in between the 886. Then what happens next? I now bring it to where it starts, the X, because after I've identified my C, then I take it to my C. And what is going to be my entry? This level. So where you see it bouncing from now is the 7.8, 7.9, 7.86 zone. 7978 zone. So this becomes my entry. Let me set it like this, and then stop loss, and like this, like this. Now the hack here, the hack here is simple. It doesn't play out on every chart. uh on every coin, that's the word to use. It doesn't play out on every coin, but the hack here is when you see it active on specific coins. Like I used a case study of Peep and Bonk on this. Now when you see it play out on these specific coins, it is very powerful. In fact, it is very consistent, and you can decide that you don't want to trade any other thing and just trade 2 3 4 coins consistently with those patterns, week in, week out, and you're very sure of increasing the amount of money you're making repeatedly, repeatedly, over and over and over again. Like I said when I started, there are two ways. So there's the first part which has to do with the Quasimodo patterns, which is QML. I said people can go and read QML entries. You can read about it if you want. But the one I would focus on teaching us is HSC, which is harmonic smart entries. And under harmonic smart entries, we have about 8, but the 8, 5 of it is powerful in the bearish market, and only 3 is powerful in the bullish market. And out of the 3 that are powerful in the bullish market, my focus is to teach us one of those 3 so we can understand it, we can master it, and start using it by ourselves. And that one is the Bullish Gartley pattern. But this is the thing. I did not exhaust everything, because I think this is something I would have to teach a second time. I'm going to explain all over again the second time, and then now complete the other part of it. But if you grasp what I say, you can literally even start using it. But I will still do it a second time because of those who are not going to get it at first. And also you can rewatch the video, go on Google. The only thing about Google at times is that different persons can be saying different things. But what matters is if you get an idea, still revert to the video, this video where I started talking about it, and understand the point I started saying and go with the point I give. Don't go with another point and get lost. You understand? And so tomorrow is Wednesday, right? Tomorrow I have a lot of time to rest. Tomorrow evening we'll still have another live session. So initially it's supposed to be for the bull run group. So what may happen is that I'm going to shift the bull run group private session, and then we'll still have a public session still on tomorrow on still this thing, so I can wrap it up and end it and do like a second this. So for those who watch and it seems like I'm speaking Chinese and they're not understanding, they can listen about it and see how they can get the hang of it, and start utilizing it as well for themselves. So it's now I'm actually seeing the messages that the Bonk chat was not showing. So let me do this. Let me do this quickly. So I think what is going to happen is the time for the bull run group. Maybe we're going to have a session on the Friday. We're going to have a session on the Friday, maybe, and then for general group for this particular strategy, I will still have another live stream with us tomorrow. So basically, we get to understand this better and see how many persons can start applying it for themselves. So let me do this quickly, like practically again. So I hope we can all see the screen. Hope you can all see the screen. The reason why most people don't use this is because it's a bit mathematical for them. But the truth is, if you understand it, what most times the most powerful strategies are the ones that majority of persons are not making use of. They are, and the reason why many people are not using it because it is not, it's mathematically involved. It's not as ideal for most of them, and it's still very very good, very very good, especially during the bullish market. So when the Bitcoin start moving up, it doesn't move in a straight line to move up and down. So you can be catching each retracement with it and making a lot of money. It's retracing way high up and up and up and up. So right now, let's use Bonk for example. So this is the last swing low of Bonk, and this is the current swing high, which is my X and my A. And the question I asked myself, where did this thing retrace from and bounce from first? It retraced into the 618, and then it's bouncing up from there. So this has given me my X and A, the swing low, the swing high X A, and the 618 is my B where it retraced to. So what I do is to still come back, bring the same Fibonacci to the B and then the A, because I want to find my C, and my C should be above the 382 and below the 886. So anywhere within this region is my C. So this is my C. Now I want to get my entry. And to get my entry, all I need is my X and the C. So I go back to where I started from all over again, right? I go back to where I started from. I bring the Fibonacci to here, to my X, and then take the next swing high, select my C, and then wait for the market to retrace to the 79 zone, which is where it is, to make my buy from here. And then I buy the trade. My stop loss will always be the 1.0. So that's where you set your stop loss. Now, you can even decide to tilt it down to, when you've mastered this, you can tilt it down to smaller time frame. But where it is more powerful and most powerful is what I'm telling you, what I've used over the years. So the 2 hours time frame, the 4 hours time frame, and the 1 hours time frame. It is where it is super, super powerful as well. Powerful as well. Powerful as well. So for those who basically let's say you're in the bull run group, you can see the level of calculation it takes me to do consistently before I share setups. Can you see the mental stress I go through? And sometimes in the bull run group I share like 7 setups, 8 setups at a go, 5 at a go. It takes a lot of calculations to be able to get these entries, and I even do way more than this. So what I'm doing is just even simplifying it, just one part to help persons. So this is why when you understand the value of a thing, you take advantage of it, you maximize it as well. This video is going to be left on the YouTube. You can rewatch it, learn what I did, what I said, what I explained, practice it. Tomorrow we'll go over it again, and that will be the final session for this. So we'll still have our 5 points. The next post, crypto halving, we'll still use our post crypto halving later on, but I will still deal with this. The fifth episode we'll have it later on, but this is like part 2 of today's session because I'm trying to still be in a hurry. I want to go out now, and I just made sure I just want to do this for us and then leave. Someone said this strategy will work 100% of forex. Yes, 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 it will. It will. It works a lot on forex. It works a lot on forex, on currency pairs. You can use it for gold. You can use it for a lot of things as well. So it works. It works and all that as well. So tomorrow's session is going to be in the evening. I think we might do it 7 p.m. So 7 p.m. Tomorrow's session is going to be 7 p.m. There might not be any design of flyer, but there might be notice that's going to be posted tomorrow 7 p.m. And then the one with the, what's it called, bull run group, is going to be shifted to probably Friday as well, so I can accommodate every single person, and you can certainly use this and make the most this period that we are in, especially now that BTC is retracing very very well. So bitwise for BTC, okay, so this is the thing, between today and tomorrow, this is what may happen. This is what may happen to BTC. So if it happens, you should just know that I'm going to share the screen briefly. Don't see it as should I say as a big deal, just, or should I say as the finally. So let me share it. So between today, tomorrow, between next two, still before the fourth, this could happen. So we could see that we could maybe see BTC decides to want to come back up a bit, but just so that it's a scam. Even if it comes back up a bit, it will still continue. It still has to go down, probably most likely to touch the close to the bottom of this what's it called, this channel. So even if BTC bounce now, it is just going to. So if you're in a short position and maybe you entered late, you might want to trim your stop loss or protect your stop loss. Or if your stop loss is high, then you have no problem. You have nothing to worry about. You can decide to also, if it's coming it close, you can also re-enter when it peaks, when it has come in. So what it might just want to form, it's may, if it's reversing, it's not like, it's not the major bounce. If BTC decides to reverse now, tomorrow, it's not the major bounce. What is doing is just it's just going to be like a lower high is about to be formed, and then it continues forming a lower low. So there's nothing to be worried about, and to in that regard or in that aspect for Bitcoin. So so much has been said so far, and for those who are taking advantage of the ETF report now, reach out to me. For those who the persons who paid for the ETF report, reach out to me so I can give you current information. Those who paid today, those who paid today, for those who paid today as well. And now is the right time, an opportunity for anybody who wants to capitalize the opportunity in this market. Now is not the time you want to gamble with the money. Some people, this is a time to be positioned, because as Bitcoin begins to move and begins to prove and move up as well, you can also be maximizing the opportunity in the season. So if you haven't gotten the TF report, try and get it. If you're not in the bull run group, try and plug in and join as well. So tomorrow we'll have a session. So my my number should be in the description. You can DM me on WhatsApp and get plugged in as well. See you when we see you next time, which is going to be tomorrow by 7 p.m. GMT plus one. I don't know the time we're connecting from another as well. So even if we're going to do a giveaway, it's going to be tomorrow. I don't have strength to do giveaway today. It's going to be tomorrow. Tomorrow we're going to look through, and yeah, as well. So most people who are complaining, a lot of Nigerians are getting it. These are people from South Africa, Mozambique, Zimbabwe, Zambia, Canada, and other countries. The other that I mentioned, yours or no, South Africa too, Ghana as well. Make sure you're in tomorrow's session as well. And make sure you invite your friends, and make sure I see you in tomorrow's session, because we're going to pick a couple of them, a couple of you across various countries in tomorrow's session to do the giveaway for you guys. Bye for now, guys. See you all when I see you.